this is what you would look like if you were watching the paint dry in the market and trying to fade what's going on. What's up, everybody? Bubba here, and of course this is Bubba's Daily Update, and of course the markets are like watching paint dry. And I got to tell you, I mean, it's really kind of what we've said all along. You need to sit back and relax. You cannot force the markets to do what you want them to do when you want them to do them. Now, the markets today had every reason to believe that they would sell off. You had GE cutting their dividend in half, which is a mainstay of the Dow, which it'll probably no longer be a mainstay of the Dow, but that is something that should have triggered some potential selling. It did not. So what happened? Well, the markets turned around and rallied again. Now, they didn't rally hard, they didn't rally huge, they just rallied. And this is an indication that the dip buyers continue to be in the market, and because there's no place else to go, they continue to buy stocks. Again, if you take a look around at some of the other asset classes, look at what happened in the grain markets today. They got hammered, especially soybeans and wheat. The meats, they kind of mixed back and forth. Gold was a touch higher, silver a touch higher. But overall, there's only one place that your money is being directed into. If you look at what's going on, 10 years now down to about 238. The yield curve is still flattening, which is brutal and not a bullish sign here at all. The indications of a rate hike in December are likely. The likelihood of next year, probably another 50 basis points is likely. So what's happening is 10-year rates are rising a little bit, and 30 years are falling, flattening out the yield curve. Oil continues to be in this malaise, but trying to work higher. You know, the key here is to be able to watch the money flow, watch the markets trade. And if you have an opportunity, that's great. Look for opportunity. But if there's nothing there, don't try to force a trade into a market that is not giving you the opportunity. Now, we have seen a little bit of a rise in volatility, although it was a little bit soft today, but again, not anywhere near what you would think it would have been if, into a rally. So there's a lot of warning signs floating out there right now. There's a big warning sign that we are in a bubble. There's a tremendous amount of problem with the tax, with the new tax plan. The tax plan is brutal, all right? And everybody's trying to defend it. Of course, the ones who are trying to defend it are all rich. You have to look at the overall action. That's the thing we have to focus on is not to have to be in the market or trading the market daily in and out. Those kind of markets are not here right now. These are longer term markets right now. And if you're looking to get long, then you look for great support levels. Now, again, I am not personally wanting to get long here. I'd rather wait it out and wait till some volatility. But certainly to try to get short here, unless you had something that had real weakness. Like, for example, I thought Bubba was a potential sale today. I missed the trade, but because of the big weekend they had, it opened a little bit stronger, and then of course it fell all day. Amazon broke late. The markets broke a little bit late, only to turn back around and rally again. So what we're seeing here is a market that just doesn't really care. There's nothing much going on here. So it's not a tradable market as it speaks, as a general market. Certainly individual stocks, individual issues are certainly tradable. I mean, yeah, Tesla had a big pop today, probably should be sold. But that's kind of what you're looking for here. But the overall view of the market is not one that should be actively traded, nor can you get away with trying to force your opinion into this market. The markets are always going to do what they're going to do. When they have lack of volatility, the less the volatility, the less chance you have for an error. So if you want to be aggressive into this market, you could make money, but you're putting yourself at a lot of risk, and you are no longer in charge of your own destiny. You're dependent on if you guess right. And that's what we have to stay away from. That's what we're looking for. And of course, these are the things that you need to learn and watch when the markets are like watching paint dry. You don't want to look like this guy. All right. You want to sit back and wait and relax with the market. So we'll sit back and we'll see what happens tomorrow. In the meantime, remember myhighschoolinvesting.com. Check it out. And if you care to, patreon.com/Bubba Trading. Love to have your help. Love to keep the program going, but it is getting close, and I may have to cut it off. Also, don't forget to get the Bubba Show every single day at 2 to 3 Eastern at libertytalk.fm. And, of course, Monday Night Football, Carolina against the Dolphins. Carolina wins and covers the 9 points. We'll see you back here tomorrow, same time. This is Bubba's Daily Update. Thanks, everybody. I appreciate it. We'll see you later. Take care.